All right, guys, I'm going to talk about T accounts on this one. I know you've probably watched a couple of videos, or you should have, but again, I want to talk about those key words in your transactions that will help you determine what account. And again, always remember, at least 2 accounts are going to be affected. So 2 accounts are affected at least, okay? And the other thing is you always have debits must equal credits after every transaction, okay? All right, sorry, Kitty's coming over. So we have here on the first one, Monica Geller invested an additional $25,000 cash in business. Automatically cash in bank. So if you got to ask yourself the next thing, are we increasing cash in bank? Well, if we are, then that's going to be a debit because cash in bank is an asset. Assets start with 100 and their accounts, and they increase on debit, decrease on credit. Okay, so we're going to increase or do 25,000 on the left-hand side for debits. Debits on the left. Credits on the right. Okay. In fact, before I go over this, let's go through all these. Office equipment, we've got an asset here. So it's plus, minus, debits on the left, credits on the right. Capital is the opposite of assets. It decreases on a debit but increases on a credit. Okay, Martin's Copiers, that's an accounts payable right there. Okay, so if we're talking about accounts payable, that means we increase on credit, decrease on debit. Okay, on Mega Printer Incorporated, our accounts receivable, that means we increase on debit and decrease on credit because it's another asset. Okay, so going back to that first one, we have $25,000 that's in here debit, but remember, every debit must have a credit. And since it's the company person, Monica Geller, putting into the business of the capital, we're going to debit cash and bank, and we're going to increase our capital by doing a credit to capital, making our debits equal our credits. Okay, let's look at one more, and then I'm going to stop this video, and if you have any questions, you can email me. We bought a new copier on account. Oh, right there. Key phrase, on account. So again, that's talking about accounts receivable or accounts payable. Accounts receivable, somebody's buying from us and we're going to receive the cash. Accounts payable, we're buying it from them and we're going to pay it. We bought it, so it's on account, so it's going to be accounts payable. Okay, accounts payable is a liability, so it increases on a credit, so we're going to credit $15,000. And remember, every debit must have a credit. So if we have $15,000 credit, we need a $15,000 debit. And since we bought a copier, that's office equipment, so we're increasing office equipment on the debit. Every debit must equal credit. Okay? And I lied. I'm going to do one more with you. Right here, number 4. It says purchased copier paper for $12,000. Payment was made by check. Oh, key phrase right there, check. Check automatically means cash and bank. And it was a payment, so we're decreasing our cash and bank. And if we're decreasing our cash and bank, that means we're going to make a credit of $1,200 to cash and bank. Okay? That's our credit, so we must have a debit. Okay? We purchased copier paper. Oh, that's office equipment, so we're increasing our asset. That's our debit. Debits must equal credit. If you have any questions, please feel free to rewatch all those videos I posted for you or email me. I will gladly meet you for tutoring.